Hello, this is Simon Thompson, Vice President and Wealth Advisor at Texas Legacy Wealth Management. Welcome to our monthly market update for April 2015. We're going to walk through the major market events of the month. Securities offered through LPL Financial, member FINRA SIPC, investment advice offered through Texas Legacy Wealth Management, a registered investment advisor and separate entity from LPL Financial. April was a positive month for stocks, albeit with some volatility, as we closed the month up about 1%, including a 1.5% decline during the last week. Over the month, we saw an increase in oil prices, a declining dollar. Note that this declining dollar was a reversal of the recent dollar strength. We also saw growth in the European economy, Greek debt issues resuming, a fear of China's slowdown, in soft U.S. economic data. Despite all of those items, maybe the biggest market mover was first quarter earnings season. First quarter 2015 earnings season started off slowly, even when compared to the already lowered expectations for the quarter. With half of the S&P 500 reporting, we've seen roughly 75% of companies beat earnings estimates, but only 46% topping revenue estimates. This weak top-line growth will be something to keep a close eye on as we move forward from here, and has been attributed by many firms to the continuing effects of the strong dollar and lower oil prices. Thus far, financial and technology sectors have been the bright spot, while industrials has lagged expectations. U.S. economic data has been softer recently, but the Fed has indicated they see this as transitory weakness, attributing the slower economy to a variety of reasons, including poor weather and the West Coast port strike. The Fed statement from the April FOMC meeting did not rule out an interest rate increase in June, but most Fed watchers don't expect to see a rate hike until much later in the year. We want to take a closer look at two factors hurting earnings this quarter: the continued strength of the dollar and weakness in oil prices. Multinational companies have been hit hard by the effects of foreign exchange headwinds as they translate foreign earnings to dollars at a worse exchange rate. April saw the dollar buck this trend as it weakened slightly when compared to the euro, about 5% for the month. This may impact earnings moving forward and is something we'll continue to keep a close eye on. Oil prices rallied in April, up 12% for the month, but many companies exposed to the oil and gas industry have seen revenues impacted due to the low price of oil over the last few quarters. If we strip out the effect of currency exchange and oil prices, earnings and revenue for Q1 show robust growth. Overall, we continue to see the U.S. economy getting stronger as we move past setbacks from the beginning of the year, the weather, port strike, etc., and growth continues to emerge in Europe and emerging markets. It would not surprise us to see increased volatility, with the potential of a substantial pullback at some point in the year. That said, we don't see a recession on the horizon and maintain our bullish outlook. For more information about Texas Legacy Wealth Management, you can contact us via phone, email, or feel free to visit our website. We would also like to remind you to follow us on Twitter and like us on Facebook. Thank you.